With the markets in question, we turn to host of Boom Bust here on RT, Bart Chilton, as well as Peter Schiff, CEO of Euro Pacific Capital. Bart, I want to start with you. You host the financial show here on RT, but In Question is a news show. Our viewers might not follow the stock market as closely. Can you start by briefly explaining what these three American indexes, the Dow, S&P, and NASDAQ, represent, as well as why you think that VIX indicator, the fear gauge, has gone up in the past 24 hours?
Sure, Anya, great to be with you. So two things. The Dow Jones Industrial Average is our stocks that are traded on the New York Stock Exchange. It's the largest public companies there. It's 30 of them. And then you've got the NASDAQ Composite, which is 100 companies that they look at on the technology-based NASDAQ. And then the S&P 500, that really tracks both of them together. It is a composite of U.S. companies, and so both traded on both NASDAQ and the NYSE. And so that is a really good gauge. And all of those were down big time yesterday. But as were stocks today, and also some late yesterday, but today, everywhere from Japan, China, Hong Kong, even in Europe, the stock 500, that's a European gauge, also down to the lowest level since February. So this was a pretty big rout, Anya.
And Peter, last time we talked, you said Trump's trade policies could lead the United States into a crash. Do you see any indicators that this current slump could develop into something more severe?
Well, it's not Trump's trade policies that are going to cause the crash. The crash was happening anyway. In fact, Donald Trump gave a speech today, and he said that when he was elected president, or before he was elected, the economy was on the verge of a collapse, and he was right. But now it's on the verge of an even bigger collapse because all Donald Trump did was blow more air into Obama's bubble, or more accurately, the Federal Reserve's bubble. And what's been happening recently is the Fed's been raising rates. They pricked that bubble, and now the air is starting to come out. But since this bubble is much bigger than the one the Fed created that popped in 2008, this is going to be far more disruptive. And no, it's not just stocks that are in a bubble. The entire economy is a bubble, so the recession that's going to follow the bursting of this bubble is actually going to be deeper and more severe than the one that followed the financial crisis in '08 that we now call the Great Recession. This recession will be greater.
Bart, in an interview with Fox this week, Trump accused the Federal Reserve of, quote, going wild and loco. Peter alluded to that just now. He also says the Federal Reserve is what's responsible for this downturn. Is the president correct?
Using appropriate statesman-like language is usually not what we look to the President of the United States for. Yeah, he said it was crazy. Larry Kudlow came out today earlier. He's the chief economic advisor for the president and tried to say, no, the Fed's not crazy. You know, we're looking at these things. People always have to be like the guy after the elephants in the parade cleaning up this president on what he says. But let me just disagree a little bit. And we love Peter. We love him on Boom Bust. The numbers do matter, and you can debate some of them, but the economy really started making a lot of positive signs at the end of the Obama administration. They've increased. We can debate, what the value is. We asked Peter the other day about wage growth. We've seen some wage growth, but we've also seen consumer prices going up. And so if you look at those numbers, 2.7% wage growth, Anya, last month versus a 2.7% increase in the consumer price index. That only means wages are just growing a little bit. So the folks that are making money, there's a big inequality gap in this country, and 1% of the capital and the wealth in this country are owned by 50%. That continues to exacerbate. And I don't doubt, Peter, that we may be coming up to some recession. I'm not sure when it's going to happen, but this is a correction, and there may be more to come.
Well, Peter, the market can only ride like a bull for so long. The nature of our economy is that it goes through these booms and busts, hence the name of Bart's show. Why is that? Why can't we come up with something a bit more secure?
Well, we would if we had a free market, but we don't. We have a central bank that constantly blows bubbles, and this is the biggest bubble they've ever inflated. And, all bear markets look like corrections in the beginning, but then, of course, if they go down enough, they become bear markets. So I think this one is potentially going to be the mother of all bear markets. Maybe it depends on when the Federal Reserve comes in and tries to save the market. I don't know that it's going to work. But, it's not that the Federal Reserve has gone crazy. That's what Donald Trump says. They've been crazy the entire time. In fact, raising rates is the most sane thing they've done. The problem is they haven't raised them enough. What was really crazy was lowering rates to zero. What was crazier was leaving them at zero for as long as they did. What was really crazy was doing 3 rounds of quantitative easing and Operation Twist. So they've been crazy the whole time. And the economic numbers that you're talking about that we've had under Trump, they were all paid for with additional debt. We have run the deficit through the roof as if it was, it was already bad enough, but we jacked up government spending, we reduced revenues to finance it, and we bought ourselves some more time, but at great cost, because now we just have a bigger bubble.
Very briefly, Bart, I'll let you respond as quickly as you can. Is it a free market that would prevent booms and busts?
No, we've got a free market, but Peter's right. There are some sideboards on it. The Fed is one. Regulation is another. I think we've got the best markets in the world. But bottom line is, yeah, things are improving, but he is right that debt is a problem. The debt that we have now is largely a result of a $1.5 trillion tax cut that was passed. That's helped the economy, but it's like we're all coked up, and sooner or later, we're going to come down to reality. And Peter may be right that it'll happen sooner than later. We'll have to keep an eye on it.
We'll keep an eye on it, and we'll bring you both back on to discuss. Peter Schiff and Bart Chilton, thanks so much.